Hello there, welcome to my channel. In this video, we want to look at a question on the preparation of statement of cash flow notes. So we are going to look at the preparation of the cash generated from operations, calculations or calculation of on cash generated from operations. We are also going to look at the calculation of dividends paid, taxation, and also fixed assets purchased. So I'm going to our question. Our question reads, use the relevant information to prepare cash flow notes at 1 August 2022. So you are given information whereby you're given at 1 August 2022. So beneath that, you are given a statement of comprehensive income for the year ended 30 August 2022. So there that you just need to browse through before you attempt the question. You are also given notes and additional information that you also need to go through. So the first part is saying calculate the cash generated from operations with 16 months. So going to our other section, you'll see that this is now the cash generated from operations, whereby we are going to start with the net profit before taxation. Net profit. And on net profit before taxation, we try to refer to the question, try to find the figure for our net profit before taxation. So you'd see that 45,000 is our net profit before taxation. So basically, this is what we have in terms of net profit before taxation. And from there, we are going to make some adjustments. So we are just going to say adjustments in respect of so we are going to list the adjustments beneath that, whereby we are going to look for non-cash items and then we add them back. For example, depreciation. Initially, depreciation in the income statement was subtracted as an expense, but under the calculation of cash generated from operations, we are trying to remove all the non-cash items that were adjusted in the profit and loss account in the income statement. So since depreciation was initially subtracted, it means in this note, we are supposed to show it as an addition as we are removing it. So we can just refer back and try to see. We have got depreciation whereby we have 3,900 for depreciation on equipment, then we've got 4,300. And so if we add the two, we get the total depreciation. So we are just saying depreciation, whereby we are adding the two by saying 3,900 plus 4,360. So having done that now, our total becomes 16,260. So we can show it as a positive. And then I will look for other adjustments like interest expense. Remember, interest expense in this income statement is subtracted. So in the calculation of cash generated from operations, we are supposed to remove it by adding it back. Remember, interest expense is a cash item, but we remove it because of disclosure procedures. We remove it in the calculation of cash generated from operations, but we reinstate it again in the statement of cash flow under cash flow from operating activities. So we can just take note of that. So the procedure of adjusting it in the cash generated from operations is just a disclosure procedure. So we come here, we see that our interest, we try to include it, interest on loan, 5,160. So we have 5,160, which we are going to regard as our interest on loan. So it says interest expense. So we have interest expense with 5,160. Then from there, we are also supposed to calculate so that we get the operating profit before changes in working capital. So in other words, we are now adding there to get our net figure that is going to be our net change in net change in operating, net change in before changes in working capital. So basically, we try to end there by saying 45,000 plus 16,260. We add again 5,160. Then we get a total. We get a total of. Let's just try to add. So after adding, you get your 66,420, which is going to be your operating profit before changes in working capital. So this is going to be your operating profit before changes in working capital, which is 66,420. Then beneath that now, we are going to have changes in working capital. So basically, here we are now here. We now have changes in working capital. So we are going to put the elements of working capital beneath that, and we notice in terms of the changes that we have. So if you refer back there, we are going to look for elements of the current assets and also current liabilities. So for current assets, you can also notice that we have got trading inventory, that is here. And we have got a change that we have, a movement that we have from 47,960 to 42,880. So we see that it is a decrease. So remember, if it's a current asset like trade inventory, if it shows a decrease, it means it's going to be indicated as a positive. So if it's an increase, that's when we indicate it as a negative. So the opposite is true for current liabilities, in particular trade payables. If trade payables increases, it's a positive. If trade payables decreases, it's a negative. So in this case, we've got a positive of 47,980 minus 42,880. So we come and summarize as such. We are saying changes in inventory. We can just say inventory. Whereby in brackets, we are going to show the working by saying 47,980. Again, we subtract 42,880. Then the answer that we're supposed to get is 5,100. So then again, we check for trade receivables, whereby we got our trade data 17,420. Remember, this is the previous year, 2021, and then the current year, 2022. So we can check the movement from 2021 to 2022. So for trade data, we are saying it's from 13,400 to 17,420. And we see that this is also shown, this is shown as an increase. So remember, if it's an increase of a current asset, we said it should be shown, it should be shown as a negative. So you can just calculate the increase by saying 17,420 minus 13,400. Thereby, our calculation now is 17,420 minus check the where it's changing to minus 17 minus 13,400 minus 13,400, and we show the difference of 4,020, which we are going to show as a negative. And Next one, we have trade creditors as a current liability. And we see that it's a movement from 27,600 to 37,220. So this is indicated by an increase of trade creditors, which is supposed to be shown as a positive. So we calculate the difference between 27,220 minus 27,600. So we have trade payables. I'll subtract 27,600. Then if you subtract, you're going to get your answer is 9,620, which is going to be a positive. So that's what we have. Then we can add to get add and subtract to get our changes in working capital. So if you say 5,100 minus 4,020 plus 9,620, you are going to get a positive of 10,700, 10,700. And from there, we now need to calculate the cash generated from operations. Remember, we are calculating cash generated from operations. So to get it, we are now going to say 6,420 plus 10,700. Then we get a total of 77,120. So basically, this becomes your final answer. And this figure represents cash generated from operations, and it's supposed to be transferred to the statement of cash flow under our cash flow from operating activities. So this is what we have on the first part. Now we go to the second part, whereby needs us to calculate the dividends paid. So on dividends paid, we are just going to use the formula opening balance. We add dividends paid, dividends for the year. Remember, we've got the dividends that are supposed to be included in the retained income and not. So the total dividends for the year are supposed to be added. So plus total dividends. So we add total dividends for the year, and then we subtract our closing balance. And we are opening balance and closing balance. They are balances of shareholders for dividends. So in this case, this is an alternative formula that you can use, or you can use another alternative formula by saying interim dividends plus opening balance of dividends. So remember, we have got the opening balance for shareholders for dividends. Then we get to interim dividends. You get also the dividends are paid for the year. So this one is more simple. So we can just try to refer to the opening balance that we have. You see that we can just look for shareholders for dividends. So you can see that shareholders for dividends is here. And then the opening balance is 6,000. So in other words, we are here, we are saying already we have 6,000. So 6,000 here. And then we add it to our interim dividends. Then we check how to calculate our interim dividends. So if you come here, you'll see that it reads dividends on shares for 2022 interim. They were paid on 31 March, which is 15 cents per share. That's our interim. So we can just take note of that. So that we've got our interim here mentioned here. So you need to know how many the number of shares that are there by 31 March. When we put additional 2022, which was after March when interim dividends were supposed to be paid. So it means we are not going to include the shares which were additional shares because they were after interim dividends. So we can just refer back to see number of shares that we have at the beginning. We are given information that the value of the shares at the beginning is 200,000 and each share was 5 rand. So to get the number of shares, we are now saying 200,000 we divide by 5 rand per share. 200,000 the value divided by the uh, value per share. And then you get your answer is 40,000. So we have got 40,000 shares. We have got 40,000 shares at the beginning of the period. So to get our interim now, we multiply our 15 cents for interim times 40,000. So 15 cents. So we can as well try to calculate that one. So if you calculate 0.15, which is 15 cents times 40,000, you are going to get your answer 6,000. So it means we have got 6,000. We have got 6,000 as our interim. So it means here we are also going to have our 6,000 for interim. So if you add, you get your. So if you add 6,000 plus 6,000, you get your 12,000. So it means our dividends paid is 12,000. So you can just summarize that on the answer section. Just summarize that on our answer section, whereby we are saying interim dividends. We got 6,000. And then we say opening balance. Also 6,000. And then you add the two, get your 12,000. Is dividends paid. So basically, that's what we have on the calculation of dividends paid. So we can as well move on to the next part. So on calculation of tax paid, we are going to start with income tax for the year as reflected in the income statement. So we are going to say so from there we can now be able to go and check the income tax for the year reflected in the income statement. We see that the income tax that we have is 12,600. So we have it here. So this is the income tax for the year. So we come here, we put it here as a positive figure. And then from there, we can now be able, to check in terms of the balance at the beginning of the year. So we can just say, therefore, for balance at the beginning of the year, we can try to go back again to see what we have. We see that we've got SARS income tax balances at the beginning is 2021, and we have a 40, which is a debit. So if you've got a balance at the beginning of the year, and it's a debit balance, you should show it as a negative. We should show it as a negative. So it means here, we are just going to say negative negative 40. And then from there, we also include balance at the end of the year. So our balance at the end of the year, we refer back again. We see that now at the end, we have got 50 rand and it's a debit again. So a balance at the end, if it's a debit, we are now going to show it as a positive. So we just take note that at the beginning, if it's a debit, show it as a negative. If it's a credit, show it as a positive. And at the end, if it's a debit, we show it now as a positive. It not become the opposite. And then if it's a credit, you now show it as a negative. So that's how we're going to present it. So in this case, we have got a closing balance, which is a debit, which is supposed to be shown as a positive. So we've got 50 rand. So we come here. So basically, that's what we did. From there, we can now be able to add and subtract so that we get the balance that we have. So if you say 12,600 minus 40 plus 50, you get 12,610. 12,610. So this becomes the tax paid. But we know that tax paid is reflected in the statement of cash flow or the income statement. In the statement of cash flow or the cash flow statement, we are supposed to show it as a negative. Because as we are paying tax, it's an outflow, and all outflows are shown as negatives. So basically, we are saying our 12,000, as we go to the statement of cash flow, it will be a negative 12,610. And we know that tax is adjusted under cash flow from operating activities. So we can take note of that. So going forward, also you'd see that for dividends paid again, it indicates an outflow, which means our 12,000 as we go in the statement of cash flow. We should also show it as a negative because as we are paying dividends, it's an outflow. So we should show it again as a negative. So we can take note of that. Then we go to fixed assets purchased. Calculation of fixed assets purchased. So we go to the information given. We are given information of non-current assets. It's additional information whereby it reads note number 3. During the year, an additional warehouse was erected. New equipment were bought, and an old vehicle was sold. So basically, it's very clear that the only one that was sold was the old vehicle. And we are calculating purchased. So for the purchase, we only have warehouse, which is landed buildings, and then we also have equipment, which was purchased. So we have 2 elements. So we can start with additional warehouse, whereby we say we check in terms of the balances that we have for land and buildings. So for land and buildings, we have got 80,000 at the beginning of the period, and then it increased to 172,000. So that's where we've got the additional amount which was purchased. So we've got 172,000 minus 80,000. So on our answer section, we are going to say land and buildings. We are going to say our land and buildings. Whereby we show the working. by saying 172,000. So basically, that's what we have in terms of our landed buildings. And if you calculate there, you see that you're going to get your answer is 92,000. Then if you check in terms of the other non-current asset that was purchased, we bought equipment, but equipment we are given carrying values at the beginning and at the end. So when we are given carrying value and you want to find the amount that was purchased, you are going to say formula that you are going to use, you're going to say carrying value, carrying value at the end. You add depreciation for that asset, add depreciation for the year for that asset. If you have got any disposal at carrying value, you are supposed to add it again. Disposal at carrying value, you are supposed to add it again. And then obviously now you have to subtract your carrying value at the beginning. So basically, this is the formula that you can use to calculate the ones that was in any addition or anything that was purchased. So in this case, our carrying value for equipment at the beginning is 33,400. So we're going to say at the beginning so we can start with carrying value at the end, which is 45,400. So here we are saying 45,400 is carrying value at the end plus depreciation for the year for our equipment. We check information given. We are given that depreciation for equipment is 3,900 as we are seeing it. 3,900. So we are saying plus 3,900. And then we are supposed to add if you've got disposal at carrying value of the equipment, but in this person you do not have, so we leave it. Then we subtract carrying value at the beginning, which is now carrying value at the beginning of equipment. We are here is 33,400. 33,400. And from there you cannot be able to make your calculations whereby you just add and subtract. Going to get your 15,900. So your answer becomes 15,900. And we know that this is a purchase. And we know that we are purchasing. So obviously it's an outflow. So our 2,900 will show it as a negative. So as you come to your answer section, you can just summarize that whereby we are now saying equipment whereby we say 45,400 plus our 3,900, then subtract 3,400. And then with that, we are supposed to get your answer as 15,900. So if you add the two, you will get the total purchased. or if you say 92,000 plus 50,800, you get 107, which is 107,900. So this becomes the total for fixed assets are purchased. So basically, this is becomes the last part of our notes to the statement of cash flow. Hopefully, the video was helpful. And please, let's not forget to subscribe and share to our channel. Let's not forget to share the link to our colleagues who are doing cost financial accounting. And six, let's stay tuned for more videos to come. As for this video, I'm signing out.